Stocks traded in a narrow band on the monthly expiry as we speak. The Nifty is finding some as the year end nears. Energy stocks eke out gains, but realty and IT are the big drags. Mid caps are underperforming.
Ola Electric ramps up to at 3,200 stores with the service stations, taking its total store tally to the targeted 4,000. The expansion takes it well beyond the metros to serve Tier 1 and Tier 2 cities. The stock gains on Q.
Oil marketing major BPCL has marked its entry in the solar energy segment with a 150 megawatt solar PV project order from NTPC. The renewable energy initiative puts some green on the stock.
The non-availability of enough technically skilled labor is hurting execution, engineering and construction major KEC International tells CNBC-TV18. This adds to the growth challenge for the sector even as capex has slowed down.
Good afternoon. You're with us here on Halftime Report on CNBC-TV18. I'm Hormas Fatakia, and with me today is Anuj Singhal. Anuj, good afternoon. And one headache that India had, which is Travis said, he's out for a duck. But the other headache that the Nifty has is the 200 DMA, right?
Oh.
What's the setup on the final expiry looking like?
Oh, absolutely, Hormas. Good afternoon. First of all, it feels like home, even though I've moved across to this wall to the other studio. But still, in this studio and this chair still feels like home. When you said India removed one headache and the other headache remains, I thought you were talking about Kerry because he's still playing. But anyway, yes, as you said, this is the last expiry, Hormas, for the full year. And the market's been showing you what happens when there's no equilibrium. The FIs are on holiday now. The volumes are down to just 20% of overall volumes. If you compare volumes over the last 2 days to last week, we're down to 25%. Anyway, in terms of levels to watch, even amid this thin volume, there are two levels I'm watching out for. 23,640 on the support side, that was the Monday low, and 23,850. If you map the last 3-day high, every time the Nifty is going to 23,850, it's collapsed intraday from there, and that's where the 200-day simple moving averages play. So I think it's winner take all, as far as these two levels are concerned. On the Bank Nifty, Hormas, now the expiry is gone. From next month, of course, you'll have only one expiry for Bank Nifty, and that will happen only on the last Thursday. But that's gone now. Here the support is 50,500 to 50,800, and the resistance is 51,500 to 51,750. But today, what's been interesting is the way mid-caps have underperformed. If you look at the mid-cap index and if you look at the advanced decline today, the mid-cap index is down more than 0.5%, and advanced decline line would come up for you. And that's now distinctly in favor of the decline. So I think that's been the other key talking point as far as today's trade is concerned. But the Nifty is fine, I guess, trading at this range right now.
The advanced decline is firmly in favor of the declines, but then there are plenty of mid-caps that are doing well for themselves as well, right? It's a pretty stock-specific market. Intellect Design is one of them. It's 12.5% higher now as we speak. KFin Technology is one of them. We spoke about it early in the morning as well. It's taken its year-to-date gains now past 220% as we speak. But one such winner, though, of 2024 was BSC, and that stock has also surged more than 145% so far this year. But HDFC Institutional Equities, in a recent note, said that there was a notional volume drop, which is significant across equity exchanges after that 1 weekly expiry per exchange that was implemented, and that has also led to them having a reduced rating on the stock. Now, to discuss this and more, we have Sundaram Ramamurthy, the Managing Director and CEO at BSE, joining in. Mr. Ramamurthy, good afternoon. Thank you so much for joining in, and season's greetings to you and everybody at BSE. I wanted to start off by asking you about these implementations, right, of these new F&O norms. That it says that notional volumes have dipped significantly. Premium volumes have also dropped compared to that in the third quarter, which means you are getting now better premium realizations. Now, what is the impact that you are seeing post the implementation of these new norms?
First of all, thank you so much, and good afternoon and season greetings to you for having me with you today. SEBI implemented all the rules in order to ensure market protection and also bringing better participation in the market compared to anybody participating. So from that, one of the important the requirements or rather outcome expected was there will be a rationalization of the notional volumes across exchanges post implementation. Having said that, out of the 6 implementation, only just 2 have taken impact. The third one is going to take effect from Jan and the remaining of 3, 2 in February and 1 in April. So ascribing whatever the market situation today totally to whatever the regulatory directions are may not be statistically correct, because there is more to come in the days, because it is just the beginning. And the expectation was to bring down the notional, because there were too much of froth in the market. That's what some of the people were feeling. And also this month has been a month of lot of turmoil, with lot of activity in US post the elections and the Fed rate cut, and India's inflation numbers being perceived as high. Multiple reasons because of which the market went up to say 85,000, 86,000, and then came to 72,000, 77,000, and then went to the type of a market movement has been seen. So therefore, it is too early to say that this is the impact of the SEBI regulations that have come into effect. Yes, sure. Nationals have come down as it was expected to be brought down.
Mr. Ramurthy, good afternoon, sir. What I want to understand is that has the impact been more pronounced in the Bankex volumes? Because from what I understand, that was the one product where now you've moved to monthly, and the liquidity all of a sudden has dried up there compared to Bank Nifty, where also volumes have come down, but not as much as is the case with Bankex.
It's a fair question that you are asking. Bankex, see, the entire derivative setup in BSE itself is a relatively new one.
Yes.
It is just 15 to 16 months old for sensex, and even much lesser for Bankex. So Bankex is a relatively new index, and whereas Bank Nifty is a very, very mature index with significantly huge levels of participation, and it started as a monthly contract, whereas Bankex started as a weekly contract. So we may not be able to expect the same type of impact in Bankex compared to what you are seeing in Bank Nifty. Indeed, Bankex volumes have drastically come down. We do see some activity in the monthly contract, but not the levels of activity which we were seeing week on week in respect of expiry in Bankex before.
So in that case, would it be fair to say that the BSE volumes would take a significant hit, and in that case, the earnings that BSE showed last quarter was perhaps the peak earnings, at least in the foreseeable future?
Generally, we don't give any futuristic numbers, but I'm not able to conclude it that way. The reason why we are not able to conclude it that way is the income earned is based on premium. The one part of the expenditure is based on notional, another is based on the number of contracts. If the quality of premium improves compared to the fall in notional, and also the fall in the number of contracts traded, because the contract size is also going up, naturally then it will lead to an advantageous situation compared to a disadvantageous situation. Because while the income will increase because of the premium quality becoming better, the cost will come down because of the notional and the number of contracts coming down. As you would recall, we have been working very heavily on getting traction in respect of next week and next to next week contracts, and also in monthly contracts of sensex. And also we have been trying to, we have already decided to move the expiry to Tuesday instead of making it Friday.
Sure.
In Friday, Friday was the only date available, so we took. So naturally, since all the other 4 days were fully busy, the traction in respect of sensex was more on expiry and expiry -1, leading to a slightly lesser quality of premium, which will get addressed. So at this point of time, because of fall in notional volumes, revenues, top line or bottom line would be a hit is too early to predict. We have to wait and watch for the full impact of all the 6 requirements coming into existence.
I get that point. You know, Mr. Ramurthy, that's an interesting point you're raising. And I remember asking this question to Mr. Ashish Chauhan. And you know that now that you move to monthly and the premium obviously is much higher in case of monthly expiry, does that in a way actually benefit you? And his reply was that if you shut down the say Colaba Causeway Market or the linking road, it doesn't mean people will move to Gucci showrooms to buy the bags. So it will still impact the numbers. So that is where my question was coming from. That there is going to be a hit in terms of your profitability overall. See, there is a difference which I always make as a mention.
In respect of a matured exchange, it is a saturated growth growing above that. In respect of an exchange like BSE, it is still in a catch-up mode. The catch-up growth behavior sometimes is different compared to the saturated growth mode. I'm not indicating any specific thing here. I'm only simply making a point. Probably at this point of time, it is a bit early. We have to at least wait till April to see the impact.
Mr. Ramamurthy, two-part question. Have you seen any spillovers in the cash market because of these new norms? And also part two of my question is, you've also introduced new contracts, both you and the NSE, on the F&O side. Is this to offset the dip in volumes because of these stricter norms, sir?
Let me take the cash market part of it first. The cash market volumes are down significantly compared to the past. Around 20% down I am seeing. It may be because of multiple reasons which are not necessarily because of derivatives. And if by spillover you thought that there will be more volume in cash, that has not happened. The global impact and the FPI is withdrawing from the Indian market probably because it's the year end and they want to show profit for their books, and many of them going on vacation. All this could be the reason, which may not be a very difficult and different trend. So the cash market spillover in terms of increasing in volume certainly has not happened. There has been a reduction in volumes. As far as new contracts are concerned, the currently existing contracts which are being traded in BSE is only Sensex and Bankex. More indices should come because of the exchange interoperability circular that has a guideline which has come in place, which is to be discussed and decided. And once it is there, more contract will come. Many of this will not be from a perspective of just offsetting what could be the revenue loss or revenue profit. What is required for the market, because MIA will have a twin hat to wear. One is the profit-making hat, and second is as a socially responsible institution as an MII. So introducing contracts could be more from a hedge perspective as well, from if there is a problem in one exchange, how to move to the other exchange. And that need not necessarily be coming out from a revenue perspective.
Sure. Mr. Ramamurthy, I'm sure you would have heard the news overnight about some investors picking up stake in Metropolitan Stock Exchange of India. And the logic being given is that now there is space for another player because the SEBI directive clearly says one expiry per week. It doesn't mean how many exchanges are there. So do you see that revival and perhaps the third exchange being there and offering another expiry, weekly expiry?
Yeah, I saw the news item. See, I've always been maintaining that India is a very large country and there is more room for more products. Now suddenly the number of products have come down. So one more product coming in is, I think from a market perspective, is good for them. I also saw that MSCI is, the Metropolitan Exchange is trying to revive itself by issuing fresh shares, and more market participants are taking part of it. I think it's a healthy sign. One important thing always comes to me is success of a product lies in its utility and market awareness. So these two are very important constituents to make a product success. I'm sure the upcoming exchange will try to work on these 2 points so that India gets the benefit of one additional contract for them.
All right, Mr. Ramamurthy, thank you so much for joining in and sparing time. Wish you good luck and a very happy new year into 2025 as well. That was Mr. Ramamurthy there, the MD and CEO of BSE. It's been a very strong year for the stock in itself, over 130% in 2024. But as we slip into 2025, CNBC-TV18 is asking some key questions. And those questions are, how will the Nifty perform in 2025? What are the sectors, the themes that you should be betting on? Will that faltering GDP growth revive in 2025? And of course, will the RBI start cutting interest rates in 2025? We will ask the experts for you. Stay tuned for the most comprehensive market poll coming soon on CNBC-TV18.
Welcome back. Well, the market's a bit comatose now. The Nifty is up only 16 points. The mid-cap index is down quite a bit. And one stock that stands out is Cummins India. It's now the second top F&O loser, down about almost 5.5%. And one more stock that comes to mind is Interglobe Aviation. It's third straight day the stock's gaining, and today also moving to high of the day, almost 1% higher. But let's talk about Ola Electric. That stock is higher in trade after the company ramped up to at 3,200 stores with service stations. Let's go across to Sudarshan for more details on that. Sudarshan?
So Ola stock has come off highs in the morning. It was up around 6%, but still now up around 1%. The main reason is Ola has increased the number of stores. So it has increased the number of stores to 4,000 with 3,200 new stores that company has added in one go. And the important part is these new stores come with service centers. If you remember, company was facing service-related issues. Even Consumer Affairs Ministry had sent show cause notice. Now company expects that these new new stores having service center as well will help resolve this issue as well. Now, other parties, company has also launched basically one operating system, named it as Move OS 5, and that is the beta version. And some of the features of this operating system include group navigation and live location sharing. Also, it has launched limited edition of Ola S1 Pro Sona, and as per company, it has launched with real 24-karat gold-plated elements. But apart from these two launches, the important part is 3,200 new store additions, and it's beyond the tier 1 and tier 2 cities. It has extended to even some of the villages as well. So, and with the objective of resolving the service-related issue, and that's the reason you are seeing this stock is higher today.
Interesting. Now, at one point was up almost 6%. As Ola Electric has given up most of those gains. As the stock made a high of around 99.95 this morning, and it's now back down to around 94. Time for a short break. Then Jay Thakkar of ICICI Securities joins us on the other side to tell you what you should do in this comatose market, as Anuj just mentioned, and he also gives you some trading strategies. Stay tuned. Back with us here on Halftime Report. The Nifty continues to remain in snooze mode after cooling off from the opening highs. But there is a stock that has done well, though. It's at a record high today. It's Newgen Software. That is trading with gains of around 5% this afternoon. And it has also had a good year for itself so far. If we can pull up the YTD chart as well, the last 1 month, the stock has gained almost 50%. For Newgen Software, 1680 now on the stock, an all-time high there, and 133% so far this year. But what you should be doing in a market like this, Jay Thakkar of ICICI Securities is joining in with more on this. Jay, good afternoon. Thank you for joining in. You know, this 200 DMA is turning out to be quite a bit of a headache for the Nifty. 23,869 on Monday, 867 on Tuesday, and around about 854 today being the highs. What's your call on the index now, and couple that up with your stock recommendations as well for the afternoon?
A very good afternoon to you, Holmas. Rightly pointed out by you, and I would add some options data to it as well, because we have this monthly expiry today of the Nifty as well, and it's the last F&O expiry of this calendar year. And what we witnessed is always that, Holmas, generally when we see the ATM straddles not expanding, so it was at around 130, 140 levels. If you talk about the ATM straddle, on a closing to closing basis, if you have seen, they panic when the moves happen either side beyond the ATM straddle move. So if at all it is 130, 150 levels, so the panic would have been about 23,900 or maybe below 23,500. As the writers, option writers are well at the comfort level, and that's what we have seen. Despite the India VIX going up today, which it had not at the start of this week, it was down by 10%, followed by 5%. But then today's been up. But we haven't seen that kind of a volatility, at least till now. And the ATM straddle prices have come down now drastically from 130, 135 to almost like 50, 60 now, indicating that probably, the Nifty surpassing 23,800 looks unlikely today. Only about those levels where we see some short covering happening, some call unwinding happening probably until 23,900, 24,000. Failing to do so, I think Nifty might end today between 23,650, 600 on the downside to 23,800. The expiry is likely to be sideways only. But then, Gurmas, going forward, what can help Nifty to inch higher is are the sectors which are beaten down, because those sectors which have outperformed in the previous fall, like Nifty IT and Nifty Bank, they have now somewhat lost the momentum. So we are not seeing the indices of the stocks maybe seeing some follow-up buying. They're giving up at the higher levels. So now if Nifty has to bounce back, those stocks which have fallen quite a lot, wherein there is a lot of short positions getting built up, if they bounce back, those sectors and stock can help Nifty bounce back from here on. Hence, I have two stocks wherein I'm recommending buy based on the short covering point of view. One is from the auto name Bajaj Auto. We have seen significant short addition since November. In fact, the price is down by almost 30%, Humas, and the open interest is up by 63%. So I think that Bajaj Auto is quite likely to bounce back from here on. The risk reward is absolutely favorable. It can bounce back at least until the levels of 9,300 to 9,500. That should be the target for the Giant series, and one can place a stop loss below 8,750 levels. That's the positional recommendation for Giant series as far as Bajaj Auto is concerned, and that's purely from the short covering point of view, as Auto is quite beaten down. And second buy recommendation is on HDFC Life. Out here, if you see, the price is down by almost 18% or once, and open interest is up by 60%. And that too, since November, we have seen a good amount of short accumulation out here. So this stock has a good short covering bounce back probability. It can bounce back till 650, 665 levels. One can buy at current market price, placing a stop loss below 610. Here too, the risk load is absolutely in favor of the bulls.
Okay, so Bajaj Auto and HDFC Life playing for some short covering. Jay, thanks a lot for joining us today with your quick view on the index and your stock calls. Let's move on then and let's dive into Growth Code, an initiative by Grow and CNBC TV18, which offers valuable insights and strategies to help you make well-informed investment decisions. This week, CNBC TV18's Nigel D'Souza interviewed professional trader Manu Bhatia to discuss the recommended minimum capital requirement for beginner traders.
What is the recommended minimum capital amount for beginners with regard to trading?
For equities, the capital amount, I think someone can begin with a capital of 2 lakhs to 4 lakhs, depending on whether they're doing a intraday strategy or a positional strategy on the equities. For someone trading in derivatives, I would say for derivatives intraday, a minimum of 5 to 7 lakhs. And if you're doing positional in the derivatives, having a capital of 10 lakhs is something that should be good from a beginner's point of view. More than the capital, you need to also have the right knowledge in place before you trade something.
Welcome back. You're watching Halftime Report on CNBC TV18. Now, one stock that's made a fresh 52-week low right now is Asian Paints. That would come up for you. That's, of course, today's chart, down about 2/3%. But if you look at the monthly chart, it's down about 8%. If you extend it a bit, I think since last quarter, I think it would be down some 30% or thereabout over a 3-month period. And Hormaz, of course, I was going through your research. You're talking about the 10 big stocks of this year. It's been a brutal year for Asian Paints. 2 out of last 3 years it's lost, and before that it had not returned negative for 10 years, including the COVID year when it had actually given positive returns. So that's been the aura for Asian Paints. But of course, a lot of things have changed. And as we saw last quarter, something unthinkable had happened when Asian Paints net profit was down 50% or thereabout. Almost halved, and coupled with sales degrowth, EBITDA degrowth, and volume degrowth as well. So it's a stock which has taken a brutal knock, and a lot of people believe that maybe the worst is not over. In fact, I was talking to Ramdev Agarwal the other day. He said the worst for Asian Paints would be over when the newcomer becomes incumbent, when Birla also becomes the part of the industry, and that's when I think things would bottom out. But right now, looking quite bad for Asian Paints.
Just one quarter has taken the stock from almost a high to a 52-week low, and also becoming the worst calendar year on record that the company has had, almost 30% down for Asian Paints. So not good going for India's largest paint company. By the way, a couple of other names that are moving in the broader markets though. Godfrey Phillips is one of them, almost 8.5% higher now as we speak. When we just checked in the break, was up 7.5%. So it's building on to those gains, and most of those gains have come in the last 30 to 40 minutes. 9% higher on Godfrey Phillips, and on volumes that are almost double its average volume that is traded in a day. So strong volumes as well for Godfrey Phillips. And the other one that I wanted to highlight though is Blue Dart. That too is now trading at the highest point of the day or close to that, 5.5% higher there as well, and on volumes which are significantly higher, slightly off the highs of the day though, but still 5.5% higher on volumes that are 22 times its average daily volume. So good going there for Blue Dart as well. But another stock that has done well today is Seagull India, and it's a recent listing, and that's because the company's arm had signed a concession agreement with the NHAI, and Vivek is joining in to tell us more about that. Vivek.
Well, that's right. Seagull, one particular stock, one particular recent listing that's very, very well delivered handsome returns for investors. Have a look at the latest news flow. When you're talking about what the company has updated the exchanges, the company has gone ahead and signed a concession agreement with NHAI. This is for a 981 crore project, which the company will go ahead and deliver and construct over the next 24 to 36 months. Now, at the end of Q2, to give some perspective, the company's order book stood at a little over 12,153 crore rupees. So on the back of that, this is a significantly large part of the order book, almost 10% getting added as far as Seagull is concerned. 22 ongoing projects is part of the portfolio that the company has, 7 HAM projects, as well as on September 30th, 2024. Remember, the book-to-bill that the company enjoyed was at 3.1 times, and this is at the end of FY24. So again, overall, a good order win coming in, order book remains quite robust. No wonder then the stock is doing quite well in the session today.
Yes, stock is doing quite well indeed. Vivek, thanks a lot for that. But despite this move that the stock has seen, and it's up almost 7-8% in the last 1 month, the stock is still trading below its IPO price, which is of 401 rupees a share. But as we slip into a break, here is some good news for our viewers. India's business news leader is now just a click away. And we are introducing CNBC-TV18's all-new app, where you can get instant access to breaking news, in-depth articles and financial world updates at your fingertips. And you can download the CNBC-TV18 app from your Apple Store or the Google Play Store right away. Welcome back. Now in 2024, the cement sector witnessed the consolidation theme, and Nigel is here to decode how will things pan out in the upcoming year. Nigel.
Well, the consolidation theme continued to play out in 2024, with 40 million tons of capacity folding up into the hands of Adani Cement and Ultratech. And over the years, Adani's foray into the cement space with a massive war chest has acted as a catalyst, triggering the race for capacity share, which has increased the competitive intensity. The top 5 players now account for more than 60% of the market. That compares with only around 40% 7 years back. The question is, will consolidation slow down from here on? Remember, the recent deals have been concluded at around $100 per ton mark. That's closer to replacement cost. Well, ICICI Securities says that cement majors like Ambuja as well as Ultratech, they have exhausted most of their cash reserves post the recent acquisitions. They add, except for a few NCLT cases, they believe that low-cost acquisitions are largely behind. And now the potential deals may command a significant premium to the replacement cost. That could make them much more unattractive on borrowed funds at low cement prices. Well, the pain point is elevated competitive intensity has led cement prices plunging to 4-year lows. Demand as well has been plagued by general and state elections, heavy rainfall in few regions of South India, the construction ban in NCR region, and also labor unavailability in various parts of the country. But part of the street is optimistic that cement sector has hit rock bottom and it's ready to fight back. Well, Jeffrey says that dealers suggest that price declines have bottomed out, and now the industry is attempting price increases every month. They believe that the recent increase in industry consolidation further supports a case of revival in cement prices. Though sustainability of the price hikes will depend on what the leaders prefer, volume or price increases. Well, Goldman says that their channel checks suggest that demand is recovering, though on a low base. With the expected pickup in government capex, rural demand is likely to improve, and urban real estate market, well, that's doing well as well. So they expect that cement demand will grow by around 7% in FY26. On the profitability aspect, well, INCRED says that lower fuel cost, improvement in volumes, that could lift EBITDA per ton by around 160 rupees on a sequential basis. Though they admit on a year-on-year basis, it will still be down by around 200 rupees per ton. Axis Capital says that cement spreads are on recovery path. It's at the highest levels we have seen since January 2024. They add that spot spreads are now 12% higher sequentially, though it's still down by close to around 5% on a year-on-year basis. So 2024 has been a brittle one, both on pricing and demand. The hope is that 2025 cement will be in far better shape and it could deliver a far steadier performance.
Well, the industry would certainly be hoping so. Nigel, thanks a lot for that. In fact, earlier we spoke to Sandeep Ghosh, the Managing Director and CEO at Birla Corporation, and let's listen into excerpts from that conversation.
The prices have moved up by and large in most regions, except so much in the south. And the increase is modest, though. I would place the increase between 5 to 7 rupees a bag, which is, say, around 150 rupees a ton. So that is there, and I do hope, I do expect it to be to hold on, and especially things should pick up further in January once both the cold recedes, and then there is also this whole impact in the north of what they call the Malmas. During mid-December to mid-January, there are no new constructions, particularly in the individual home sector, which start. Large players, again, I think instead of exercising pricing power, they will be greatly focused on costs. Especially one of the large players is, focusing a great deal on the supply chain, doing major disruptive, changes, moves in the supply chain, because they have, and that is as per their stated policy. So you will see a lot more focus coming in on cost savings rather than taking huge price increases. That's my overall assessment. But certainly FY26 looks better than what FY25 and FY24 second half was.
That's the hope for the cement industry going into 2025. But we go into a short break right now. And on the other side, Manisha Gupta joins in with Chirag Gupta, the founder and CEO of 4700 BC, a snacking brand known for selling gourmet popcorn. Stay tuned.
Welcome back. And on 21st of December, the GST Council announced different taxes for different types of popcorns, whether it was open, loose or branded or differently flavored. To get some sense on how the industry has reacted to this, we are now joined by Chirag Gupta. He's founder and CEO of 4700 BC. Chirag, hi. The whole country has been talking about popcorn in the last 1 week. Is it more complicated? Is it more confusing? How, as a company, are you reacting to this?
As an industry, I think what is really good is there is clarification on this, right? There was a lot of uncertainty, a lot of different brands were doing different taxes for popcorns. And being a startup brand, new age brands, it is very difficult for us to reach out to government and get clarifications properly through a proper channel, right? So I think good somebody came out and clarified it for us. So in that way, it's just clearer of the future. There's going to be no taxation issues going into 2025. I think that's one of the positive side I look at it now.
All right, there are some positives into it. But you know what, Chirag, a lot of people, including me, tend to mix up their popcorn flavors and eat it. How are you going to tax us now?
So I think the laws has defined some points where if you mix multiple flavors, you have to ideally tax on the higher taxation product. So if I mix a savory and a sweet product, ultimately you get taxed for the sweeter product, right? And there's laws defining around the same. Yes, it becomes little complicated because you're doing it in the same flavor, doing something, but I think that's a smaller problem which we can get clarification from the government immediately. We will take a stand of putting a higher tax, not to complicate further. But I think it's actually much clearer than before, as I said again. But I think law says that you have to tax for the higher taxed product in the overall product.
All right. And Chirag, how would you say is the industry categorization right now, organized versus unorganized? And what is the sense? Is there more push towards branded stuff as we go ahead from here?
If you look at the snacking category overall, right, it is largely unorganized, right? If you go to tier 2, tier 1 cities, you get fresh made snacks available in every kirana shops, and they're not branded. I think as we getting digitalized, as the economy is getting better and better, I think as distribution for the brands are getting easier, I think there is definitely organized market which is increasing, right? So if you look at some of the numbers which was 10 years back to today, I think definitely organized markets have increased. What is difficult, what is challenging is there's a lot of taxes or laws are not applicable on the unorganized market versus organized market. So a brand or a company which is paying all the right taxes and doing it in the right way have to sell a product on a higher price than an unorganized market, right? So I think that's where I think government has to be more strict so that it get that benefit to the consumer is consistent across unorganized and organized market. On the other side, I think with this whole digitalization, organized market is increasing at a much faster pace now. People are getting on the digital platforms as we speak. So I think the future is we will see a faster growth towards the organized market than unorganized.
Chirag, also, how have you seen the industry grow for the last many years with the more brands coming in, more and more flavors coming in, and gifting becoming a trend as well? How have you seen the overall popcorn industry grow?
So, I mean, the way I always explain this to everybody, right? I mean, 30 years back, nobody used to eat chips from a packet, right? Everybody always thought chips are always made fresh and served and made fresh at home or in a market, right? And then consumed. Over the period with marketing done, use cases being developed by bigger brands, right? Now, today, everybody eats popcorn or chips out of a bag, right? And not fresh. I think the similar problem is getting solved for popcorns also, right? I mean, people were consuming popcorn in this country largely through cinemas or rediwalas in the market, right? If you go internationally, right, popcorn is like any other snacking product. If you go to US, chips and popcorn are sold next to each other on the shelf like anywhere else. So I think it is just a problem of getting marketed to the consumer in a right way. I think it is a problem of availability of the popcorn on the shelf now. I think these two things, if we as a brand or other brands start solving, I think consumer will get used to popcorn in a more ready-to-eat format. I think one of the challenging areas for the popcorn as a category was people always thought as an inconvenience of making it at home versus chips, which was always available in a packet. I think with a brand like us who's solving that problem, I think the growth of ready-to-eat popcorn is very high in last 4 or 5 years. We have as a company have grown at 7x in last 4 years, purely on ready-to-eat market, right? So I think that trend is growing very fast. And if you order on Blanket and they get delivered your product in 10 minutes, nobody wants to spend another 5 minutes in making the product or 10 minutes another to make the product. So everybody wants ready-to-eat product these days. So I think popcorn category hugely benefit with the ready-to-eat product being available in the market now.
All right, so 7 times growth in last 4 years for gourmet snacks. So what is the sense now for 2025? Are there more products coming out of these bags and dabbas in the coming year?
So I think we as a company, what we doing at 47BC is we are now a premium snacking brand and not just a popcorn brand. We are positioning ourselves to be a brand which a consumer look forward for newer products, right? Innovative products, right? A more value-driven products to a consumer. And that's what as a brand we are doing, as we speak. So if you've seen, we launched Pop Chips, we launched Crunchy Corns. So we're launching a lot of new products, new age products into the market. So 2025 looks great year for us as of now because quick commerce is growing very rapidly in this country. Customers are getting used to using that platforms. So there's definitely huge growth we will drive from the digital platforms. At the same time, the brand is getting known to the consumer, whether it's from a digital platform or whether from any other platform. So I think we will start leveraging by adding more and more products to the same consumer bucket, right? So today, if you ask buy our popcorn, it is easier for me to convert into a chips product from 47BC, and that's how we will increase our revenue. So I think in next few years, I think 2-3 years, I've been saying this to a lot of people, is the best time for a consumer brand in this country, largely because there's a lot of Gen Z population. There's a great digitalization which is happening in this country. And I think consumer are willing to try new products. So I think next 2-3 years is the best years for a consumer brand in this country.
All right, Chirag, thank you so much for sparing time and joining us to share your views on this recent revision in GST on the popcorn category. But will that have any impact on your popcorn choices, Manisha?
Well, he tells me that caramel is what he's going to charge me for if I mix my salt and caramel, and that's what I've done all the time. So I'm absolutely taking the caramel out.
Well, with that, on this poppy note, it's a wrap on this edition of Halftime Report. And from me, Anuj and Manisha and the team that put this show together, thank you so much for watching. Business Lunch takes you through the next 30 minutes.